Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. I wanted to go through the earnings call and just discuss the major items mentioned. I'll also be going into more detail on various elements, particularly the updated roadmap for the company, which has changed significantly. Texas and Berlin has begun production, but Elon enforces what is more important is volume production. That's what really matters. When will these two new factories hit volume production? In the past, Elon has said volume production is over 20,000 units a month, and that he expects both these factories to reach that level this year. The Texas models will have 4680 and structural battery pack, and will start delivering after final verification of the vehicle, which should be fairly soon. As in, Texas is officially open for business fairly soon. That should give Tesla's stock price a little kick. Also, 4680 battery vehicles. Hopefully we finally get the specifications. This is such a big milestone. Tesla finally delivering cars with their own in-house batteries. Capacity expansion will continue, maximizing output of each factory and new factories and new locations. Elon says they're looking for new locations this year and will announce them later. Still, to this day, I believe the only new location Elon has ever actually mentioned as a potential location for a car factory is Northeast US. This actually makes the most sense, and I'll explain it when I go over Tesla's new roadmap in another video. I know other people are thinking UK, Japan, or even Russia or India, but I don't think that will be the case. But we will be going over this in more detail in further videos. Elon says that supply chain issues are still the fundamental limiter of output across all factories. Chip shortage is better than last year, but still an issue. Hopefully this year will be smooth sailing. It sounds like Tesla have had a really hard time with supply chains, but it also sounds like they've put a lot of effort into making it work as well as it has. Bear in mind, Tesla's level of growth last year had to face all these challenges. Hopefully these will be sorted. Elon says that despite all the issues, Tesla will comfortably hit above 50% growth for 2022. Then we move on to full self-driving. Elon says over time, FSD will become the most important source of profitability for Tesla, which is what we've all established a long time ago, especially when you start playing with Robotaxi numbers. Elon even says if you run the numbers on Robotaxis, it's kind of nutty, as they get crazy high. Elon says he is confident that it will be achieved, and Elon's guess is Tesla will achieve FSD this year. Elon says that the car getting this software update will likely be the biggest increase in asset value of any asset class in history, which he has said on numerous occasions before. He says it will also improve safety and accelerate the world to sustainable energy through vastly better asset utilization, as in a Robotaxi can serve a lot more driving than a single owner, which is all very much in line with Tesla's mission. Then we move on to the product roadmap. Elon starts by saying we're not going to mention any new products, as they deserve product launches of their own, implying we might have some new products coming out soon. However, it won't likely be a new model car, probably more likely a new battery. Tesla's main focus this year is scaling output, which makes sense now they have constructed these two new factories. Elon then goes on to point out why they're not releasing new models. I'll go deeper into this in a few videos as it explains Tesla's objectives. When I explain it all, it might even feel like Tesla is pivoting. It's so fascinating. I think some investors and consumers will be upset, but it is most in line with Tesla's overall mission, which was not to make the most badass vehicle the world had ever seen, as much as the Cybertruck fans will be disappointed. Anyway, there is enough about this for several videos, and I will explain how this is incredible news for the company and investors. But basically, Tesla wants as many Teslas on the road as possible, not as many different Teslas. It doesn't matter as investors, this is good news. It's kind of like either Tesla can produce, say, 500,000 Model Ys a year and 250,000 Cybertrucks, or they can produce 1 million Model Ys a year. That's 33% more vehicles produced, as long as they have the demand to support it, which is the point, isn't it? They do. Elon says that the most important development they're doing this year is the Optimus humanoid robot. Again, we can expand on this and the economic implications in future videos. Next we had Drew talking about 4680s. Throughout 2021, Tesla focused on cell supply. Drew says cells from suppliers exceed other factory limiting constraints that were mentioned. In other words, 4680s are not a constraint to 2022 volume plans, but are making meaningful progress of the ramp in Kato and building 4680 structural packs every day, being assembled in vehicles in Texas and will deliver the first 4680 vehicle this quarter. The focus on the cell, pack and vehicles is driving yield, quality and cost to ensure they are ready for larger volumes this year and next year as they ramp. The 4680 impact tool installations in Austin are progressing well, with some areas producing first parts. The factory is an amazing accomplishment. So Drew just confirmed 4680 production is progressing at Austin. Now here comes the negative part that likely affected the stock price. Elon reiterating that Tesla does expect to still be partly or primarily chip limited this year, and that is the driver, but should be alleviated next year. After that, Elon says we move into a battery cell limitation of how many gigawatt hours a year of battery can be supplied. This is when the 4680 battery will become very important, as it means Tesla can ramp up battery supply to meet all this extra vehicle ramping, in that Tesla can grow as fast as they can get batteries. Then Zach Kirkhorn was on the call going through the financials. The biggest surprise was the increase in SG&A, which was explained with stock-based compensation. However, what he goes on to say was that the plans for growing vehicle deliveries above 50% is achievable just with Fremont and Shanghai factories. This is implying higher than 1.4 million is possible from these two factories this year. Although this is good to hear, this is something we have been expecting is more than possible with what we have seen coming out of Shanghai lately, but it's good to hear it validated. He goes on to say the existing two locations have been running under capacity due to supply constraints. Bear in mind just how fast Tesla could have been growing had it not been for all these supply chain issues, and if efforts were spent on growth rather than fixing supply constraints. They are seeing inflation and rising commodity prices, which are putting pressures on costs. Tesla do expect to see stronger operating margins as they grow their volumes and improve operating leverage. Over the long term though, lots of efforts are being deployed in manufacturing innovations and operational efficiencies to reduce costs from the hardware, and with the rapid development of FSD, software-based products will become a strong addition to the profits generated by selling the hardware. Then we move on to the shareholder questions. The first question is asking about progress on the $25,000 compact. Elon says we're not currently working on it, but they have too much on their plate to really work on it now. Elon says that this is the wrong question to be asking though, implying that the person asking the question is interested in a low-cost Tesla. Elon is saying that it's not the low-cost car that is important, it's the low cost of transport. Autonomous vehicles are what will reduce the cost of transport the most, not a smaller Tesla. We'll go over the future of the compact car in more detail, as this really sheds a lot of light on the mission here. I've been saying not to expect the compact model for some time still, possibly 2024 or 2025, but Elon may be saying even longer away now, don't expect it soon. Elon is asked about HVAC, and they eventually talk about how Tesla will integrate solar, battery, energy, heating, etc. in one system, but they have a lot on at the moment, as it is, so no commitment to a time point as to when this will be done. Dojo appears to be on track for doing something useful by the summer this year. What matters is at what point it becomes more competitive than GPU cluster for training, and the GPU cluster is also improving, so it's a moving target. Dojo is not required for FSD, but it does create a cost optimization on training vast amounts of video data, along with a faster rate of improvement. Elon says he is not saying for sure Dojo will succeed, but FSD can manage without it. Also, the first use of the Tesla bot will be used in the Tesla factories. The next question is about insurance, and Tesla are noticing that the feedback Tesla give to their drivers is encouraging drivers to drive safer, and it will reward it monetarily with cheaper insurance. By the end of the year, Tesla hope to be in enough locations that 80% of their drivers in the US can sign up to Tesla insurance. Then we had the question about what will the factory capacities be. Now, as you know, I suspect Elon is somewhat sandbagging the capacities of these factories and doesn't want anyone to know the capacity. We've seen Shanghai deliver over 70,000 units in 1 month, an annualized rate coming in at 840,000, yet Tesla claimed to have a capacity still of only 450,000. Elon avoids this question by starting to say, I don't think we can comment on. He then gives a slight strawman answer, instead saying, it's always possible to increase the output of any given factory. So what's the max capacity? Well, it's hard to judge, as if you put a lot of effort in it, capacity can increase quite a lot. Almost like saying, how long's a piece of string? Elon says that increasing capacity is not necessarily the smartest thing to do due to logistics. You want to be closer to your customer, and that will save costs in transportation, especially if you're aiming to become more affordable, which again reinforces my belief of the future short-term plan for Tesla, which I will get into in another video. Elon explains how Austin should deliver to the eastern two-thirds of the US as the logistics costs are much less, and again mentions that a new factory location may be disclosed later this year, which is starting to make me think I might have a good idea of where that might be. Remember, on his first question regarding the compact Tesla, he literally said, "You are asking the wrong question," and gave an alternate answer. Elon could have done something similar here and said you're asking the wrong question and then given an idea of potential run rate of these factories at the end of the year. Instead, Elon didn't even hint at any indication of capacity for the new factories. Elon is asked about battery limitations within the Cybertruck. Elon says that batteries will not be the limiting constraint with the Cybertruck, in that there is a lot of new technology that needs to be worked through. Tesla need to work out ways of making the Cybertruck more affordable. Elon even says that they aim to reach 250,000 vehicles a year with the Cybertruck. This is a very low number when compared to Model 3 and Model Y units, so it sounds unbelievable. I would expect Cybertruck to be closer to 1 million units a year potential, or else it's not going to be a large enough contribution to the underlying mission. The next question is about how much of Tesla's margin is to do with 1. Economies of scale, 2. Production line design efficiencies, 3. Reduced transport cost, 4. Pricing versus cost inflation, and 5. Other sources. And how much further could margins improve? We're given the response, the mix of the Model Y is increasing, which matters because it carries a higher margin than the Model 3, and also due to labour efficiencies, and as fixed cost amortizations improve, the costs all go down as well. Localization in Shanghai has been a big deal, logistics and duties is a big part of it, but the factory had a different line design, more efficient from the start, and they've been pushing the boundaries on the volume there, which is likely why we're seeing Model Ys come out of the factory as quickly as every 33 seconds. Model S scaling and price increases over the year have also added to improved margins. Then we're told to be prepared that these new factories opening will add significant cost to the business, but then to focus more on FSD and the potential upside of that. Everything is pale in comparison to the value of FSD and Robotaxis, which we've fully explored in the past and are in agreement. It's just not as tangible as selling more vehicles, talking about a 5x increase in the value of the asset as it turns from a regular car to a robotaxi. The cost of the car remains the same, but it can suddenly do 5 times as much. A question about whether Jojo is required for FSD, which it is not, but Elon goes on to say that driving a car as safe as a human is actually quite a low standard of driving. Elon says that the progress with beta is fast and there are a very low number of interventions per mile, and a downward trend, and there are several profound improvements coming to the FSD stack over the next few months. So it does sound like Tesla really are on top of FSD, and possibly will soon be cracked, which adds so much value to the company, although it will likely take some time until it's felt in the market. Elon even going on to say that he would be shocked if they do not achieve FSD safer than a human this year. Now we move on to the analyst questions. Elon is asked about the energy business. He starts by stating that Tesla think that all stationary storage, Powerwall and Megapacks will transition to an iron-based system. Elon says iron-based, not LFP. This might imply that energy storage may be used with sodium instead of lithium within time, due to it being a more abundant and cheaper element, and energy density not being as big a factor when it comes to energy storage. As you know, I've been saying for some time now that all energy storage will use LFP or iron-based cathodes. So it's good to see that my predictions are in line with the core business strategy. It would not have made sense otherwise. Elon does, however, change this description to non-nickel based batteries and includes manganese as a potential cathode. This is whilst talking about energy storage too, but I'm not sure if this manganese battery might also be used for vehicles as well. I'll be exploring this in further videos anyway. Elon says that the vehicle business has been taking priority over energy, namely because of chip shortages and vehicles carrying so much more profit than energy. Elon says they have a long-term goal of 1 terawatt hour of energy business a year, although we would expect and hope it to be up a lot higher than that by the end of the decade. They say once chip constraints are over, energy should be growing faster than vehicles. Elon is asked more about FSD. In case you hadn't realised, by this stage there has been a lot of talk on FSD, its progress and its potential, indicating perhaps Tesla really are getting close. Elon talks about how it will create more traffic and the Boring Company may be the solution for that, Elon says it will become cheaper to go from point to point with a robotaxi than a bus or subway. Elon says people still don't understand how profound this change is, and is likely the most profound software upgrade in history. We'll try and run some econometrics models and do what we can to evaluate the robotaxi side of the business. I think I have some ideas on how to do that. Elon has asked that if we hit over 3 million vehicles a year in 2024, how is this achieved without a $25,000 model and low Cybertruck quantities? Elon realizes, judging by these questions, that still no one understands the true gravity of FSD. Elon once again somewhat ignores the question and goes on to explain just what an impact FSD has. However, in this context, the question being somewhat inferred as asking where will the demand come from if there are no new, lower cost models available? And Elon is answering it by saying, by that stage, it will have become a different product and the demand will be unfathomable, i.e. the moment Tesla moves from an EV product to an AV product, leaving the competition in an even bigger pile of dust. Elon explains it's not only about the utilization of the asset, being able to drive around 5 times as much as a robot, but also how it frees up any driver's time too, and they can be focused on productivity or entertainment instead of driving, which also adds tremendous value to the economy. In addition to that, all other economic benefits of safer cars if you include cost of accidents, along with the loss in productivity due to injury. I think I read in an economics book that this cost was close to something like $1 trillion a year. That does seem high, and I can't recall the exact figure, but I assure you it was a really high amount either way, and certainly indicative as to what FSD can do for the economy. FSD is huge, clearly hard for people to grasp, but looks like it's coming soon. We really need to work on some updated robotaxi models. Elon does, however, go on to somewhat answer the initial question and says if the cost of the car did not reduce, then Tesla would still have no trouble selling every car they make, implying that Tesla could sell about 3 million Model Ys and 3s a year at the current price points. This is a huge statement and a way of showing just how strong the demand for Teslas still are. Remember, this is demand for their old cars too, not 4680 versions. I will definitely be covering this further. Then Pierre asks about the 4680s and form factors, a subject that I also think is important. Pierre's question is an example of how few people still understand 4680s. I've tried to explain this many times. The 4680 size is what is most efficient for nickel, getting the right cost and efficiency for the specific chemistry and use. We then hear that there may be better form factors for an ion cell. Now, I assume when they say form factor, they're referring to actual size, as there's no better form factor for scalability than cylindrical batteries. And yes, this is what I've been saying for a really long time. Tesla's LFP batteries will not be 4680. I have said this so many times. But now you get to hear it right out of Elon's mouth that we won't use 4680s at all for the ion cells. Different chemistries have different ideal sizes and is also dependent on the actual application. And then they end explaining more about the chip shortages and how they will soon be alleviated. I will expand upon the aspects that I feel are important over the next few weeks, but a quick summary is that it would appear demand for the Model Y and 3 are absolutely insane, and there's no point in bringing out any new models that will only further add to complexity and take energy and resources away from different areas that will be used less efficiently and not make as much progress towards the end goal. Tesla do appear to still be struggling with chip shortages, but these will be alleviated by the end of the year and hopefully shouldn't be too bad this year compared to 2022. Demand is very strong for the current models already, so I'm afraid as a consumer, it's possible you might not even expect to see Cybertrucks next year. And as for the compact Tesla, it may not even be necessary. FSD seems very close. I was always of the thought that hopefully it's achieved in 2023, but sounds likely it will be 2022. We'll discuss what this means and the other associated aspects. I think Tesla has slightly pivoted, and I know why, but you'll have to wait to find out in future videos. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.